So what we're going to look at on the webinar is an overview of the tax advantages of owning a furnished holiday let. So we'll look at each tax and look at the advantages that may apply, and then the conditions to get that status. First of all, those requirements that are essential. So the meaning of the conditions, including the location, including what we mean by commercial, letting, furnished, occupancy levels. And one of the occupancy levels does give a little bit of leeway in terms of averaging and a period of grace election. Interestingly, you can set non-FHL losses against an FHL property business when you bring it forward, although I'm not at all clear where you would show that on the self-assessment form. I think one of the points we made was that needed to be clearer where you would claim for that particular loss. No sideways relief, sadly, is now due. So as you can see, we're not quite enjoying full trading status on this. Trading losses can go sideways. One exception is where the loss is due to capital allowances, then you can set that loss against total income of the current or, on election, the following tax year. Just let me talk about capital gains at this point. And capital gains tax incorporation relief we've referenced a couple of times as we've worked our way through, and you'll find this at section 162 of the Gains Act. And the condition is that the business and all the business assets, other than cash, if you want to, you can leave cash behind, will be transferred to the company as a going concern, wholly in return for shares. If it's not wholly in return for shares, then only a proportion of the gains are held over. But by the way, assumption of a mortgage by the company is not treated as non-share consideration under a concession.